Hi and Assalamualaikum warahmatullahi wabarakatuh, and have a nice day everyone. Today our group will present about Tawarruq financing. Before we start, let me introduce our group member first. Firstly, we have Ahmad Abidin, Umi Amalia, Fatin Azwani, Nur Atika and me, Zaidi Zamri. Hopefully you all can enjoy our presentation and understood what we want to deliver. Supporting small business is essential for driving economic growth, fostering innovation and creating employment opportunities within our communities. Small business serve as a backbone of local economies, offering unique products and services while contributing to the overall vitality and resilience of the community. However, accessing the necessary financial resources often poses a significant challenge for this business, particularly in financial systems that rely heavily on interest-based lending. In this context, Sharia-compliant financial products such as Tawarruq financing play a critical role. Tawarruq is a financial arrangement that allows individual or business to obtain liquidity in a Sharia-compliant manner. It involves the purchase of a commodity on a deferred payment basis and subsequently selling it to a third party for immediate cash. This process ensures that the financing is free from interest, riba, and adhere to Islamic principle, providing an ethical alternative to conventional loan. By supporting small business through Sharia-compliant financial products like Tawarruq, we can create an inclusive financial system that addresses labor's needs, uphold ethical standards, and promote sustainable economic development. This approach empowers entrepreneurs and small business owners, ensuring that financial growth is achieved in a manner that is just and equitable for all members of the community.
Next, we move to overview of the product, which is Tawarruq financing for SMEs. For the purpose this product provides is to facilitate business operations. Tawarruq financing aims to provide SMEs with the liquidity needed to manage their day-to-day operations. This includes paying salaries, purchasing inventory, and covering other operational expenses. SMEs that have just started a business will definitely face cash flow challenges, where the timing of the income and expenses may not align. Tawarruq financing provides the liquidity needed to ride out these fluctuations, ensuring businesses can continue their operations without interruption. In addition, operating expenses, which are fixed expenses such as rent, utilities, salaries, and inventory purchases, require a consistent cash outflow. Tawarruq financing helps cover this cost, maintaining business continuity. The method of this Tawarruq financing is the process entails sales a good on a deferred payment basis to a SMEs. After that, they will sell the item to a third party in order to get immediate cash. Small businesses often face significant challenges in accessing the capital needed for growth and sustainability. Traditional banks and financial institutions often view this business as a high-risk investment due to its limited credit history, lack of substantial collateral, and perceived uncertainty. As a result, small businesses may find it difficult to obtain loans. In addition, the lack of Sharia-compliant products compared to conventional finance. This is due to the specific nature of Islamic finance and the limited number of financial institutions that offer this product. SMEs face the problem of finding suitable and Sharia-compliant financing options. The causes delays in obtaining financing, which may hinder business growth and expansion. In addition, the increase in the cost of goods makes SMEs very vulnerable to commodity price fluctuations. Factors such as inflation, supply chain disruptions, and global market dynamics can cause a sharp increase in the cost of inputs required for production and operations. This will burden small traders to capitalize their business returns and maintain competitive price. Small businesses in the community are struggling to get the financing they need due to a lack of interest-free and ethical financing options. This hinders their growth potential and has a negative impact on the economic development of the community. Without adequate financing, SMEs cannot invest in new technology, expand their operations, or enter new markets. This limitation stunts their growth potential and ability to contribute to the local economy. This can be confirmed through one of the SMEs person through the daily news. 35% of respondents admit not getting any financing due to lack of collateral, complicated application process, high interest rate, and lack of credit history. This clearly shows that each of these deficiencies causes SMEs to have difficulties in making financing. The another issue is about the financial pressure faced by SME due to the increase in the cost of goods. One of the most frequent issues they face is the rising cost of goods, which result in a lack of return and capital for their company. For startup small businesses who lack the funds to sustain their firms, this will be even more difficult. According to the news evidence from the metro, if these traders are not able to survive with the decreasing number of customers, while the cost of basic material is expensive, eventually these traders will have to close their business. This clearly shows that it burdens small traders and will cause most traders to see no improvement in their business. If their necessities require a relatively high cost, it will cause SMEs to become a declining business.
Next is the concept. What is the separate sales and transparent profit sharing? Separate sales and transparent profit sharing is a Sharia-compliant financing option offered by Islamic banks. In this type of financing, the bank acts as a facilitator, not a lender. Here how it works. The bank uses its own funds to purchase the desired commodity directly from a supplier. This is a first sale. The bank then sells the asset to the SME with a predetermined profit margin added to the original purchase price. This profit represents the bank income for facilitating the transaction. This is the second sales. The SME uses the cash obtained from themselves or the reseller to repay the bank the original purchase price of the asset plus the profit. There are a number of benefits to separate sales and transparent profit sharing for SME. First, it is a Sharia-compliant financing option, which is important for business that want to operate in accordance with Islamic principle. Second, the profit margin is fixed and transparent, unlike interest rates that can fluctuate. This can help businesses with budgeting and financial planning. Separate sales and transparent profit sharing is a viable financing option for SME that are looking for a Sharia-compliant way to finance their business. Imagine you're a business owner in Malaysia who needs to buy a large shipment of steel to complete a construction project. The steel costs Rm100,000 upfront, but your company doesn't have that much cash readily available. This is where Tawarruq comes in. Before that, let's refresh what is Tawarruq. Tawarruq is an Islamic financing arrangement that helps businesses like yours acquire commodities without upfront payment. Here's a breakdown of the process. You approach your Islamic bank and request Tawarruq financing for Rm100,000 worth of steel. The bank agrees and purchases the steel from the supplier on your behalf. The bank sells the steels to you with a pre-agreed profit margin, let's say 5%. So, the total purchase price becomes Rm105,000. The bank assists you in finding a buyer for the steel. You might sell it for the original, which is Rm100,000, or slightly less depending on market condition. You use the proceeds from the steel sales Rm100,000 to repay the bank for the original purchase price Rm100,000. You also pay the bank the 5,000 profit on the sale once you fully repay the bank. The Tawarruq transaction is complete.
Next, there are 4 features of Tawarruq financing. First is financing mechanism. This set up a financing arrangement for the consumer. The consumer receives cash from the sale of the commodity to the bank, therefore covering the bank initial purchase. The price difference between the two sales equals the bank profit and financing cost. Second is underlying assets. The commodity is not the main focus of the transaction. It functions as a traded good, facilitating the funding process. The particular commodity pick may differ based on market condition and law. Third features is Sharia compliance. Tawarruq tries to obtain financing without using riba. In other words, is usury. The bank profit comes from the difference in price between the two sales, not from the interest rate implemented on the loan. Finally, for the fourth features is regulation and scrutiny. Tawarruq funding can be complex, requiring careful structure to maintain Sharia compliance. Regulatory organization and Sharia expert frequently examine Tawarruq transaction to ensure they meet all of the legal standard. I want to add a little bit is operational consideration. There are several operational aspects are crucial for Sharia compliance, which is first is physical delivery. The commodity should be physically delivered to both bank and the customer at some point, even if it stored temporarily. This avoids accusation of the transaction being purely fictitious. Second is independent contract. The two sale contract with the supplier and the customer should be seen as independent transaction to avoid accusation of a pre-arranged buyback agreement.
Next, I will continue to explain more about advantage of Tawarruq financing for SMEs. The first one is immediate access to cash. So the Islamic financial institution purchase a commodity like meters or behalf of the SME. So the SME then buys this commodity from the financial institution on different payment terms. Finally, the SME sells the commodity to the third party for immediate cash. For example, like an SME needs 5,000 ringgit for operational expenses. So the financial institution buys RM 5,000 ringgit worth of metal, which the SME buys on different payment terms. So the SME sells the metals to a third party buyer for 50,000 cash. So obtaining the liquidity needed without a conventional loan. Alright, the second one is easier qualification compared to traditional loan. So the Tawarruq financing is more accessible to SMEs because it does not require the high value collateral or stringent credit requirement typical of conventional loan. So this type of financial is asset backup through the commodity transaction, reducing the risk for the financial institution and making it easier for SMEs to qualify. For example, a small business with limited collateral cannot get traditional loan due to high interest rates and strict requirements. So Tawarruq financing provide an alternative that is more accessible using the commodity transaction as collateral. The third one is aligning with Islamic principle. So Tawarruq financing adheres to Sharia law by avoiding prohibited elements like interest or riba, excessive uncertainty, horror, and investment in forbidden haram industry. So the transaction involve a clear structured process where all terms are transparent and fair. ensuring compliance with Islamic principle. For example, a Muslim business owner needs financing but cannot use conventional loans due to their interest-based nature. Tawarruq financing provides a Sharia-compliant solution, allowing the business to receive the necessary funds without compromising religious principle. The last one is enabling investment in opportunities. So Tawarruq financing allows SMEs to invest in growth opportunities by providing funds with flexible repayment terms. SMEs can use the funds through Tawarruq financing for various purposes such as working capital, purchasing equipment, or expanding operation the amount over an agreed period. For example, like an SME wants to expand its operation by purchasing a new machine but lacks of upfront capital. So using Tawarruq financing, the SME buys the machinery on different payment terms and sells a commodity to get immediate cash. So enabling the purchase and supporting growth.
Tawarruq financing is a Sharia-compliant financial arrangement that enables individual and small business to access liquidity without interest, aligning with Islamic principle. This type of financing involves a structured process where a financial institution purchases a commodity on behalf of the customer, sell it back with added profit, and assist in selling the commodity for cash. Tawarruq provides immediate access to cash, easier qualification compared to traditional loans, and align with Islamic principle by avoiding prohibited elements like interest. It supports SME by offering asset-backed financing, enabling investment opportunities, and facilitating business operation. Despite challenges faced by small business, Tawarruq financing serves as an ethical alternative to conventional loan, promoting sustainable economic development and inclusive financial system. That's all from me. Thank you for listening.